to Canadian Mortgage Videos live today for July 15th, 2022. We got some great content here today. We're joined by Sam Thompson. Sam, how are you today?
I'm doing good, Joe. How are you doing?
Not too bad. It's great to be here. We are going to be reacting to the rate announcement that the Bank of Canada just put
Yeah.
out the other day. We got some really uh, hot news coming out of the Bank of Canada this week, don't we, Sam?
Yeah, absolutely. I mean, I'm pretty sure there's like a media fire now for all of the responses and reactions and speculations from Wednesday's rate announcement.
You bet. So let's get right into it here. We have just the first news article here, just how the Bank of Canada's rate hike will impact mortgages, loans, and spending. I don't know if you can see that there, Sam,
Yeah, looks
but
good.
yeah, looking good there. The Bank of Canada did increase its rate on Wednesday. This article from the Toronto Star talking about it's the largest rate hike the country has seen in 24 years.
Hmm.
I can't believe 1998 was 24 years ago now, Sam.
Yeah, that's right. Puts into perspective.
Yeah, well, it looks like the rate will now be 2.5%. We went over
Hmm.
this on our pre-rate show and interest rate announcement on Wednesday. Really caught probably a lot of Canadians off guard the fact that the rate was increased by 100 basis points.
Yeah, exactly. I know we had commented, a lot of media sources and even ourselves, we were pretty bought into the 75 basis point hike, but they definitely wowed us on Wednesday with a full percent increase with that 100 basis point hike. And it does have, a lot of impacts, even, from any type of variable rate, whether it's mortgages, car loans, lines of credit, anything like that.
You bet. Yeah. It's really going to impact that. And it's going to really buckle down on spending for Canadians. And that's really what the government is going for to try
Mhm.
to limit inflation here. Let's look at this other article we have here. It's really talking about, actually, this is courtesy of Canadian Mortgage Professional, how there's no cause for panic on variable rates. Even though we're talking about how variable rates will be affected, we have these articles that are coming out saying that, you know, even though the rates are expected to increase again after for Wednesday's announcement, there's still no cause for panic. It's a very
Mhm.
interesting title here. Let's get right into this one.
Mhm.
So, looking at this here, there's a lot of Canadians that do take variable rate mortgages, and looks like they are looking at another oversized rate hike with another one by the Bank of Canada of 0.75% on the way. That is another
Uh-huh.
supersized rate hike after our 100 basis point rate hike. And it's a really also big uh, claim that variable rate mortgages are okay because there are a lot of folks that are worried about mortgages right now and about their
Mhm.
rates. And perhaps, we should not be worried. Perhaps this article does show some merit.
Yeah, I mean, when you look at the narrative and the sentiment of where clients are at, especially if they're relatively new to even just the mortgage side, they're seeing rates increase, 225 basis points since March,
Yeah.
which seems like a lot in such a short window. But again, the reality, looking at it, is it appears from Canadian Mortgage Professional that variable rates still are a good option, despite seeing what we've been seeing, since March of this year.
I mean, really, you're right, Sam. And I think Canadian Mortgage Professional does have some good evidence here to even show that all mortgages are stress tested in Canada.
Mhm.
So even though the variable rate has been climbing, currently the variable rate for most variable rate mortgage holders sits still below the current stress test levels. So that is good news. And for those clients, in a variable rate, uh, it's good to know that you've already been qualified for that mortgage based on these rates climbing.
Mhm.
Let's take a look at this article here. It says that the Bank of Canada sees, CMHC, so Canadian Mortgage Housing Corporation, which is the arm of the government that insures all the insured mortgages for CMHC. They see a chance of recession if the Bank of Canada policy rate sits 3.5%. Now, it's not quite that high yet, is it, Sam?
No, I mean, again, it's sitting at about 2.5%. So we'd have to see, again, some pretty beefy rate hikes at the end of the year to have us reach that mark. But yeah, it does seem like it is something that's in the future if, the Bank of Canada continues, tightening that range and increasing the overnight rate.
Mm-hmm. And it's interesting to look at this graph too here. Just looking at this one together, we do see that we are now in the middle of 2020, which puts us about, so maybe we have experienced most of the rate hikes, which
Mhm.
we will see this happen. But if we do experience any more, then we will see this peak still happen, according to canadianmortgagetrends.com. So this is a really
Mhm.
interesting graph. Let's take a look at one more article here, and that's that Scotiabank itself, a big player in the Canadian banking space, is not even
Mhm.
worried about its floating rate portfolio.
Right.
And I don't really want to get into it too much here, Sam. But what I wanted to say is that Scotiabank's a big player. They do have quite a bit of variable rate mortgages out there, and if they're not worried, and we're seeing these other articles coming out from Canadian Mortgage Professional, Canadian Mortgage Trends, not to be worried.
Mhm.
Maybe they have some merit here. Maybe we should be listening to what they have to say.
Yeah, absolutely. I mean, the evidence is in the stress test that, qualifying for that isn't everyone's favorite part of the mortgage process when they're getting qualified, but it's in place for situations exactly like this.
Exactly. It's been good to have that. I think the government did a good job implementing the stress test years ago, as much as it was a difficult thing to take on as a mortgage professional and to
Mhm.
be able to share that news on to our clients. But yeah, it's great to have you here today, Sam. Sam Thompson is a mortgage agent out of Barrie, Ontario, originally from Ottawa. Moved here about 2.5 years ago, and it's been with the Mega Mortgage team for just over 2.5 years. It's great to have you here today, Sam.
Yeah, thanks so much for having me. It was a great topic to cover. Looking at the effects of that Bank of Canada rate hike, Joe. So thanks for hosting today's video. You yourself have been in the industry for well over 11 years, getting close to that 12-year mark, living up in Aurelia. So thank you again for having me on the episode today.
Thanks very much, Sam. As you guys are watching here today, if you do have any comments or questions, feel free to reach out, share the video, comment below. We'd love to hear what you think we should be talking about. Send us an article, maybe we can react to it for you. Again, thanks for watching, and we'll see you next time here on Canadian.